Hey there, it's Rob Folia, author of Real Estate Reset, and with Folia Properties here in Nashville, Tennessee. I wanted to come to you today because it is the first week in August, and you know what that means. If you've been a follower of this channel, you know that the first week, preferably the first day, but at least the first week of the month, we always come in and take a look at what's happening in the real estate market. So without further ado, let's dive right in. But before we do, if you could do me a favor, hit the like button, hit the subscribe button. It helps my channel grow, and just helps make sure that you're getting accurate real estate news in your feed on a regular basis. But without further ado, let's just jump right in, and I want to take a look at mortgage rates first. Mortgage interest rates, man, this has been something that we have talked about like ad nauseum over the last little bit on this channel. We've seen them grow. I mean, you can go back the last few years and take a look at some of the past videos, and you might have seen us talk about, when it was growing here in 22 and so on. Good news though, over the last 90 days, really, I mean, you can see here from May 2nd all the way to August 1st, rates have gone down about half a point, from about 7.25 to about 6.75. That's great. It's definitely great news. It helps with affordability. I do want to make sure that I don't oversell that news. I have seen too many of my real estate agent friends from around the country sell that news like it's the best thing since sliced bread, that, 0.5% drop of rates, man, like that's the best thing that we've ever seen. And that all of a sudden homes and interest rates, man, that's solved the affordability crisis that we have in America. It hasn't yet, but it's good. For every 1% that rates change, it affects a home's affordability by about 10%. So basically, in the last 3 months, we've seen homes get about 5% more affordable. That's without home values going down. So that's great news. So it's definitely something to celebrate. And what this tells me is that if you're a home buyer and you've been thinking about buying a home, but you're like, man, rates are still kind of high, I'd like to see them come down, I would take advantage of this. I definitely would. I think it's something to where, rates are so unpredictable that in 90 days from now they could be back to where they were. They could have gone up further. Who knows? I would get in the game right now and and lock into something like this. That's just me, I'm not giving you advice because obviously I don't know your particular situation. But if you're curious about it, hit me up. I'll always, if you're getting this in your email, reply to your email. But if you're on YouTube, Facebook, Instagram, wherever you're seeing this, you can always leave a comment, and I'm happy to engage with you that way as well. But interest rates kind of trending the right way, and that's always good news. We'll see how low they get. This might be where they kind of plateau. You can see it's about a 52-week low. But who knows? Maybe they'll get even better than this, which would be great. But I want to take this opportunity to look at a local market and really see how things are trending as we're starting to see rates drop just a hair. Again, we've seen homes get about 5% more affordable with this interest rate drop. We won't see the impact of that quite yet on here. We'll see that in about 60 days. That's just it's a lag, it's a lag result, lagging result. But let's see what's happening in the real estate market for like what I've got pulled up right here. Just the July 24 market. I just pulled up a random zip code in Murfreesboro, 37128. I think it's a good way to start to see what's happening in the market and get a finger on the pulse of what's going on. We'll start at the top here. New listings. You can see we actually saw 14 more new listings this year as opposed to last year in July. Might not sound like a ton, but it's actually an increase of 10%. Great news right there. When we're seeing inventory, I say great news because we've been in a housing shortage. There's been a shortage of homes for sale. And so if we see more homes hitting the market, that's a good thing. I imagine we're going to continue to see under contracts trend up as well. Hopefully we see that catch up, to where it's trending the same, because we don't want to see it shift into a buyer's market that ends up seeing, home values go down. And that's not good for most people anyway. But you can see active inventory is still low. It's still below where we were last year. Months of supply still low. You can see it's down 31%, from July of 23 to 24. And so that right there, this right here is all honestly a very telling stat. In fact, let's look at a timeline. I think this is one that's worth a timeline, an in-depth, a real in-depth analysis. In fact, let's go back 3 years. So when we go back, and hopefully the system wants to load, Real Tracks has not been my BFF recently, but here we go. This is what I wanted to see. So if you guys go back in time and you think back to about 3 years ago where we were, this right here, where there was less than 1 month of supply, that was the craziest market we had ever seen in terms of the craziest sellers market. That's right there. That right there was where, rates were insanely low. This was the market, especially heading into the beginning of 22, around right here where my mouse is. That's the market where there were 20 offers on a home in 20 minutes, and there were so many buyers out there because homes were so affordable despite rising prices because interest rates were so low. 22 is where rates kind of skyrocketed. Just to go back in time, we can look right here. In middle of 22, you can see where rates went from 3% all the way into, by the end of 22, 6.5%. In fact, they hit 7% in 22 as well. You can see, I mean, rates basically tripled in a span of 9 months in 22, or, roughly 9 months, and roughly tripled, but you get the idea. And that's where inventory had jumped up. Now, the encouraging thing that I'm seeing here is the fact, and the reason I wanted to look at this, and I'll go back to it in a second, is the fact that you can see yes, there's ups and downs, there's peaks and valleys in here, but as a whole, inventory levels, for a pretty populous zip code in Murfreesboro, which is, an outlying area of Nashville, are staying relatively stable. When I'm seeing 2 to 3 months, that's a strong seller's market, but I'm not seeing it go back down to one. I'm not seeing it start to flirt with a buyer's market, which, 4.5 months of supply is not a buyer's market, but it's the strongest buyer's market we have seen in quite some time here in Middle Tennessee. So that's, to me, that's an encouraging sign of a stable real estate market. Um, this right here was what I was curious about and why I wanted to see. Because again, just looking at the timeline, you can see there's ups and downs. Um, there just are. But the reality is, when I'm seeing the snapshot here of of just less than 2 months of supply, of last year being close to three, the year before that being around two, that's just a good sign. I think that's a good sign of a healthy market, and a good sign of just the way the way the housing market is going here in Middle Tennessee. Um, Again, to me, what this says, and I'm going to couple it with the interest rate news that we were talking about, how rates have gone down about 0.5%. What this is telling me is that, if not only if you're a home buyer, should you get in the game right now, but I think if you're a home seller, you're a homeowner, and you're thinking about making a move, whatever that might look like, maybe you're retiring, you want to downsize, you need to cash in on your home and buy something larger for your family or for yourself, whatever that looks like. I think now might be a good time to do it as well. Obviously, 3 months from now is we're going into a huge unknown. It is going to be it's anybody's guess as to what happens in November, and then on top of that, anybody's guess as to what happens after November in terms of the economy and in terms of our country. There's no, I don't want to get political by any means on here, but there's no way to look past the fact that politics does create somewhat of a divide, and the reality is our country is going into somewhat of a state of uh of flux, so to speak. Flux, flux. And so what I would suggest is that if you're a homeowner and you're thinking about doing some of those things, maybe you're ready to cash out and buy that new property, um take advantage of this. Take advantage of the fact that rates are at close to a 12-week low. They're the lowest they've been since February, if I remember correctly. um the fact that inventory levels are still relatively strong for you as a seller. And what this tells me, and I'm seeing it with my listings and with my buyers as well, the homes that we write offers on, that when a home has been on the market, there's basically a tale of two markets, I guess you could say. Let me start that over. A tale of two markets, where either a home is priced right and it sells almost immediately within a couple of days. It's not the market of here. It's not the market of 21, 22, where 20 offers in 20 minutes. But, if it's priced right, hopefully you're going to get that buyer within the first couple of days, maybe two or three. That could happen. But, more than likely, we're just looking for that one buyer that's going to give us our number because we priced it right. Or we're going to miss the mark by pricing it too high, and we're going to sit. And that's the big gamble right now, and the big struggle I would honestly say that probably 2/3 of the market is a little bit overpriced right now. And that's why you're seeing some homes sit for 3 weeks, 4 weeks, a couple of months before selling, sometimes longer than that. Gosh. But I don't want to go into any stories right now. But just wanted to say that what I would sum up this video with is that we're 7 months past 7 months into the year. And it's a great time, I think, to take action as a home buyer because rates are at basically a 12-month low or very close to it. Inventory is still strong. So if you're a homeowner, take advantage of that. Inventory levels are strong, I'm trying to say. And if you want to take advantage of that and you're curious, just reach out to me. You can always hit that reply button if you're getting this in your email, or shoot me a text, 615-238-7578. Happy to help however I can. Again, Rob Folia, author of Real Estate Reset and with Folia Properties at Keller Williams Realty here in Nashville. Appreciate you checking this out. We'll be in touch soon. Thanks, guys.